Well, welcome everybody to another episode of the Sunday Sermon, 4th of July edition. What is happening, my party people? I am Solo Dolo, your host. I swear to God, I haven't started drinking yet. Your host, no risk and no premium. Guys, today, before we even start, I want to give a very, very warm welcome and special thank you to any service member out there, any veteran, anyone thinking of wanting to serve, anyone that has a family member, etc. I want to say thank you from myself, my family, the Wolves of Wealth community, from the bottom of my heart, for allowing us to ultimately press some goddamn buttons on a computer screen and make a ton of money, while you guys are out there giving the ultimate sacrifice. So without every one of our service members, in any capacity, we wouldn't be able to do this today. So I do want to give a very special thanks for that. Now, moving on to this week, we have a short week here, guys. Okay. We have a short week here, guys. So before you get hammered tonight, before you do all your crazy shit, watch this video, get your levels. So when you wake up hungover as fuck tomorrow, you still can just open up your broker and everything's ready to go. Now, I would not give you smart advice or think that that was a smart thing to do that. Obviously, drink some goddamn water and don't be hungover. But what I'm saying is, hey, business before pleasure. So let's get some business done here before we go enjoy the real reason why we're able to do this. All right. So let's dive right in. We've got the daily chart here. If you see, we got COVID lows 218 to COVID highs, I call them, 479. Pointed out last time, guys. I want to start with the macro sense here before I get into it. Straight steps down. When did all this start? When the Fed became hawkish, when they started doing rate raises or agreeing that they were going to do rate raises, right? Because they needed to combat inflation. They're going to start rolling off their balance sheet, et cetera, et cetera, et cetera. So the ultimate trend here is still what? I mean, we call it pop and fade, pop and fade, pop and fade. You can call it, downtrend, bear flag, right? What a what? I don't give a fuck what you call it. But if you don't wake up every morning and go, what is the trend? If it's a pop and fade trend, then you sell the rips. You sell the rips. Okay, someone that might not ever trade. What does sell the rip mean? If stonky go up, you buy puts. There you go. Very simple. You don't play the breakout to the upside. Okay, huge. Okay, I'm just giving an example. 1 resistance, 2 resistance, 3 resistance. Right? One time couldn't get through. Maybe we get through this time. Psych, drop 30 fucking points. Okay. That's what I'm saying. You more than likely break to the downside. In a bull market, you play the break up. In a bear market, you play the break down. Okay. So anytime you take calls, guys, it needs to be considered what? Counter trend. And if you're going against the trend, then your risk management should be ultimately the most superb it's ever been in its life. So you should size the fuck down. All right. If you want to do anything, wait until you get to a big ass resistance and then short the goddamn thing to hell. All right. You would have made a ton of money if you would have just waited at 460. Okay. 430. Okay. 420. Okay. Now 400. Or sorry, 390, excuse me, 390. If you were just patient and only, let's say for the whole year, you only took what? I mean, this started at the beginning of this year. One trade, 2 trades, 3 trades, 4 trades, 5 trades, 6 trades. You could have taken 6 trades with a very high conviction and great risk management, but good size, bought time on them and watch those things go insane. Okay. Insane. If you're not going to be patient, you're going to blow your shit up. Then you're going to turn to everybody else like it's so-and-so's fault. I don't give a shit. Okay. You have to practice risk management. You have to have a game plan. You have to have a strategy. Okay. And you have to know the goddamn trend. Here's the trend, guys. Pop and fade, pop and fade, pop and fade, stair steps down, bear flag, bear flag. I don't give a shit what you call it, but know that it's happening. Now, what do we have going on right here? I pointed out last week. We have another one forming, a very nice one. This one's a little bit of a bigger one. I mean, if you really look, this one's rather in a wider range. I mean, these were all pretty tight going up, but this one's going to be a fun one because here's what I think is going to happen here. We still have the gap that everybody's eyeing right here, right? up at 400, 400, 396 to 401, whatever. I think personally, we don't get there. I think the forever bulls, the guys, the people that can't stop buying calls because they think it's 2020, I think they think we get it there, but I don't think we get there. I think at best we get back to 385, maybe 390. Okay. But that's just my bias. Now, I'm a trader. I'm not predicting the future. I'm going to react at whatever level we get to and what happens there with the price action. But what I'm saying is if the trend is pop and fade, then I'm not going to be favoring any upside targets. What am I going to do though? Now you need to zoom the fuck out. Okay. You need to zoom out. Let's go to the quarterly. It's a quarterly chart, guys. Okay. Let me see when people are like, we're not too stretched out. When they were talking, I said, listen, you need to go and stretch out. I mean, let's take it back here to 95. Look at these ranges we were working at, even in the best. I mean, realistically, we stayed in a 150 to, 75. We did 75 to 150. And how long? I mean, we went from 95 all the way to 2009, 10. We stayed in a 70. Motherfucker, we went parabolic during the pandemic. Parabolic. Now, don't mind all the fuckery and cluster up here. Obviously, I'm just keeping all the relevant price levels from this year up there. But you can see what goes up must come down. Big tree, fall hard. All right. So when everybody's like, we can't go sub 400, we can't go to 350, we can't go to 300. I'm here to tell you, we most definitely can do all of those things. And you're out of your mind if you think there's something that the market can't do. Don't ever use that word. The market can't do this. Market will humble your ass real quick. All right. So now that we're zoomed out and I got your attention, hopefully, you could see what? Okay. You could see what? 350 is this 50% retracement from COVID low here, right? This 214 is the COVID low. That was when the world freaked out. We went on lockdown, et cetera, et cetera. Then this was right where the Fed said, we're not going to let the economy fail. QE, keeping rates at zero. We're buying up everything. And then we went Ripper Magoo. And how the fuck are you for how long? 2 years, all the way up here, right? Okay. Now that we got up here to the tippy top, what are we realizing here? Well, let's take a look at the trend on just the quarterly here. What did we love to bounce right off of after we got out of the 2008 recession, the housing market crisis? This green one here is the 20-day moving average, this green dotted. You see that? We went almost bounce, bounce, bounce. Perfect, right? Oh my God. So why wouldn't we think on the quarterly chart, we probably go down and get there again? Well, this is really lining up with where? The 50% retracement from COVID low to COVID high, which is 350. It's inching its way up there. You've also got this red one here. I know a lot of people in the group use the 21 EMA exponential moving average. Also creeping its way up there, right? So we've got between 337 and 350 now, right? On the quarterly. Okay. Now let's take a step down to the monthly. All right. Let's take a peek at the monthly here. What is our trend here on the monthly, guys? And we'll start from, 2000. We really recovered out of the 2008. I'd say about 2011, 12. We started noticing that uptrend, right? So we'll just keep it there. What do we notice here? Into the MA. So we got into the 20. So now we got the 50 here. 50 MA is where? I'm sorry. The 50 MA is the purple dotted line. Sorry for you guys that didn't catch that. Purple dotted line is the 50, and we're on the monthly chart. We are just on the quarterly. Now we're on the monthly. Bounce off, bounce off, bounce off. Okay. We also bounced off of the 100-day moving average almost to a T. Makes sense. This is the orange or brown, whatever the fuck you want to call this, is the 100-day. All right. We bounced right off of that. Okay. And now let's zoom in. Where is the good old fashioned 50-day moving average here on the monthly chart? 346. So we said between 337 and 350. 350, we have the what? We had the 50% retracement from COVID low and COVID high. On the monthly chart, we got the 50-day moving average here at 346, very close to 350. On the quarterly chart, we had the 20-day moving average at 337. All right, so you see where these little magnets are all starting to line up on top of each other, and you see where we're starting to make our way down to. Okay, and then the icing on the cake is if you go to the daily chart, And you see what? I'm sorry. I missed the weekly. Sorry, guys. I'm too excited for the day. I know I'm going to be going and fucking celebrating the day and having a good old time. So I'm just all jacked up if you couldn't tell. But we see here what 350 is what the 200-day moving average. Oh my God. Is it by coincidence? Absolutely fucking not. All right. This blue, green, turquoise, teal, whatever the hell you want to call this one right here. This dotted line, it's 350. What have we been screaming for? 350. Does it come tomorrow or the next day? I don't know. Probably not, but it's probably coming pretty soon. All right. I would say probably after we fall out of this bear flag here that we see that we're forming. Some point it will get right down there. And the bounce from here will be tremendous. The bounce from here could probably take us right back up to 400. We'll have us fill the gap there because everyone and their mom, for some reason, love to buy puts when the market is down huge. So when they want to short this hole, the market makers will fill them. He'll dip it a little bit beneath. They think that they're gravy. They're so fucking smart. Then he'll reverse it on them so fast. They close all their positions. All the shorts get closed and we squeeze crazy. Now, I'm just talking out of my ass a little bit, but not really, because that's really what happens. Don't short the hole. So I know I would be going long here at 350. Now, I'm not saying we're going to go back to all-time highs, but from a trade standpoint, going long at 350 is probably a pretty good idea. So what do we have for price targets down below? 350, 346, 337. If you walk through all of the larger time frames, guys, this is what you need to be doing. The trend is very clear. It's down. Okay. So now that we got that macro lesson, the macro charting out of the way, right? Do you guys see now that I feel that we would likely see that we probably pop back up here into some of these big levels, right? Maybe 390, that's big resistance there, right? On this weekly chart. Big support there. Big resistance there. You can see 1, 2, 3 could not get through, came right back down. Okay. Makes sense, doesn't it? 5 MA is here, 381. 20 MA on the daily. Okay, 386, where that opens tomorrow, maybe 385. I don't know. But so that's where I'm thinking maybe we touch there and then finally make our way down. I don't know. But this is what you need to be doing. If we get to 385, 390, you better be looking at some goddamn putas and maybe buy some time on them and get a nice swing going. If it's Monday or it's tomorrow, by Friday, by 7:15 OPEX, by August 19th. We see the flow, guys. It's extremely bearish for all the OPEX guys. All right. So now from a very shorter time frame point of view on the daily chart, levels are simple 380, okay, or 381. Call it 381. The 380, 390 gap fill is still a definite level. So 384, okay, 385, 390, 393, then 396 up here fills the gap to 391. You see the 50-day moving average here is 399. Does that make its way down a little bit? Maybe. I don't know. We'll have to see where we open tomorrow. All right. Downside levels, guys. Let me just some downside levels. Okay, if we want to get froggy out of the gate, or we see some real fireworks overnight with the futures and they fucking crater us to hell. We know here 372 huge level. 372 huge. 370 takes us all the way to 365. 365, we get 362. We're thinking about what happened at 362 last time, guys. We bounced from 362 to 392. We bounced 30 points, almost 10%. We bounced. Okay. So if you think you're going to short 362 when we get there next time, you better take another look at it. The trade and risk to reward is going long 362. Now, I'm not saying to go long and full port it, but if you're going to buy calls somewhere, that's a pretty good bounce area to take it level to level. If we hit 362, probably take it back to 365, then 370 if we get above. Okay, then watch 370 was major support, maybe become resistance, then you take puts right back down again. I'm just giving scenarios, guys. I'm not predicting the future, but you need to react, and you need to have a story. If this, then this. If we get to 385, then I look at puts. If we get to 362, then I look at calls. Keep it simple. Okay. Under 362, in my opinion, under 362, we fall really heavy. Like, I think like SPX would go 100 down from there just to make new lows. But some bounce areas that you can look to target, I go 358, 354, then 350. Okay. Underneath that, 346 and 337 was from the previous numbers mentioned. Now, what's going on this week from a macroeconomic standpoint? All right. Why do I think shit gets crazy this week? We got the FOMC minutes here, guys. Just know it's the minutes that get logged out. So know it's coming out. It's coming on Wednesday. Know that. Okay. Then we have what I like to see, consumer credit. Okay. Consumer credit. We get to see the assets and liabilities of the commercial banks. Remember what happened in 08? Banks, no good. Too leverage, went down like dominoes. All right. So let's stand back here. What else do we have? Job openings look great. I want to see that, but I really want to see this. Jobless claims, non-farm payroll. Okay. Jobless claims, non-farm payroll, and then the consumer credit, like we said before. Okay. If consumer credit is up, non-farm payroll is down, and employment rate is up, we're going to be in trouble, guys. Why are we going to be in trouble? You have more people going into debt, less people being employed. Okay. Do you see what's kind of going to be happening here? All right. So something to think about. We have quits and job openings here, which really will not really do anything in comparison to what's really going to be, everyone's going to be waiting for. So what do I expect tomorrow, guys? Definitely a move on tomorrow, up or down to resistance or support. I don't know where it's going to go. It's going to make a move there. On Wednesday, we wake up, slight move in the morning, then we'll chop all fucking day till this happens. Okay. And then we got jobless claims, unemployment rate, consumer credit. So all week we have good stuff going on. Then the following week is what, guys? OPEX. Oh my goodness. It's monthly OPEX. All right. So be ready for it. As far as earnings goes, nothing's really going on that caught my eye, but when blue chip stocks start coming out, I think the world will actually, I think that's when you pull back the curtain on the real issue and how inflation is not just affecting the pockets of the consumers, but of the quote unquote producers. Guys, if consumers can't consume, then Apple can't sell iPhones, Netflix can't sell subscriptions, Nike can't sell clothing goods. You guys see what I'm saying here, right? That's how you need to start thinking. If the market gets held up by the performance of these stocks and the stocks are sucking, when I say sucking, they're contracting. They're not posting good numbers. What do investors do? Fuck you. I take profits. I don't invest in you. No new buyers. There's no growth. Why would I put my money there? If there is more sellers than there are buyers, what happens? Stonky goes down. Okay. Keep it simple, guys. Keep it simple. All right. Now, last time I'm going to do it for you. Upside numbers, just because I've been screaming at you all day, you probably forgot. And if you didn't write them down the first time, by golly, you better write them down now. All right. So here we go. Upside numbers, 381. I'll call it 382, 384, 385, 390, 396. I'm sorry, 393, 396, 400. Perfect. Downside, 374, 72, 70. Okay, 374, 72, 70, 365, 362, 358, 354, 350. Okay, guys, that's all I got for you. That's all I got for you today. Now, get your homework done before you go drink all those goddamn beers and eat all the goddamn food that you want. All right. Again, I want to give a special thanks to all the service members out there. Truly appreciate you guys for every single thing you do, guys and gals. To give us the opportunity to live in this amazing country, to allow us the opportunity to make decisions for ourselves and how we want to live our lives, guys. Don't forget that. Okay. Don't forget that. I love each and every one of you. Okay. Go out there, get your homework done, but be fucking safe today. Don't drink and drive. I better see every single one of you in the pre-market tomorrow and in our community. Other than that, guys, have a great rest of your evening. Risky out. Peace.